Hi all, welcome to another session on SAP product costing. Okay, in the previous session I have explained you how to run a preliminary cost estimate, right? And then we also saw how to mark and release cost estimate, right? And then how you can see the updated standard price in your material master in the costing tab 2 view as well as accounting 1 view, right? Now we are going to perform few configurations for variance and settlement. Even before that, I'll explain you what is this variance. Okay, using the preliminary cost estimate, you were able to determine what would be the planned cost to produce a particular semi-finished good, 1 unit of semi-finished good. If I'm not wrong, it was some 1932 or something. Now, in this given example here, if you see, okay, now let me just show it to you. Okay, in this example here we are saying to produce 1 unit you need 3 units of raw material. You need 3 units of raw material. Okay, just mark another thing. Okay, so if you see, you need 3 units of raw material, each at a cost of 20, so your cost becomes 60. This is the preliminary cost. And in labor you need 5 hours, each hour costs you 100, each hour costs you 100. Okay, so therefore the cost is 500 hour 500, right? So 500 plus 60, 560 is your cost of goods manufacturing. See, I have taken a very simple example. I have not applied overhead, template allocation, all of those things I have not done. Very simple example, it is costing me 560. Now when you actually start producing, okay, right, you do an order analysis. That is what is called simultaneous costing, right? So along with the preliminary cost, you will be able to see your cost of manufacturing based on the actual quantity expended. Instead of 3 materials, let's say if you expend 4 materials, one became a defect, so it is 4. So then it will be 20 into 4. But here I have taken just 20 into 3. So the same 3 materials remain same. But whereas in labor, if you see, I have to spend 7 hours. Why 7 hours? Maybe I do not have my skilled experienced worker today. Instead, I have somebody else who came into shift. He is not very proficient. So I had to hire a casual labor for 2 hours. So totally I had to spend 7 hours to produce the same unit, okay, of semi-finished good, and it costed me 700. Now what is my cost of production? 760. 760 is my cost of production, 560 is my preliminary cost estimate. So my variance is 200. 760 minus 200 is 560 is 200. This 200 is determined using a step called variance, for which I need to give a variance key. Then the variance can be settled as part of settlement. Then as part of settlement, I can go and settle it. When I settle it, okay, what is the entry that I get it? Okay, so what happens is debit the production variance, it takes this variance, and credit goes to COGM. Credit goes to COGM. Now at the rate of 560, okay, when I finish the goods and receive it in my stockyard, I do a goods receipt. For that goods receipt, the entry will be credit COGM, debit inventory by 560. But production variance of this 200 goes to the P&L. Now when will it get actually settled? It gets settled during the month end. During the month end, when I do the costing run, right, using the CKML CP, when I do the ML costing run, that is when this 200 variance goes to the inventory, right? What if I sell? Then it would reflect in my COGS. That's how the variance is managed, right? Now look at what happens during the month end. During the month end, I get to know that, see, the cost of per hour labor has increased to 120. Until now it was consumption variance, right? Until now it was consumption variance. The 5 units became 7 hours, right? But now when you see, let me choose a different color. Okay, let me choose this one here. Okay, the rate itself has increased to 120. The rate has got increased to 120. The rate has got increased to 120. So 120 into 7 is 840. Now you have both usage variance as well as price variance. So now the cost of production is 900. When will I get to know? Only during the month end. This price increase of labor, I'll get to know only after I pay out salaries. Let's think that you are paying the salaries at the end of the month on 28th of the month. Then you do the depreciation run, so you get to know the machine cost. Let's say your fuel bill comes on the 30th of the month. So let's say your power bill comes on 30th of the month. So then you will see what is the total production order, how much of activity is consumed. Then you will take the total cumulative actual cost by cumulative actual consumption. You determine that rate. That rate is this 120. Then you multiply it with 7 using a tool called revaluation of order. Okay. And then you arrive at this 840. Now the variance is again what? 900. Even here you will again do a variance run. Again you will perform a costing settlement. At that time this 140 is settled to again same entry, production variance, right? Production variance, debit, COGM, credit. Now you see, interestingly, let me add two more entries to you to make it a little more clear. Okay, I wanted to add this two more entries and show it to you. I have shown it in another session. Okay. So for some reason I am unable to toggle. Okay, let's come here. Okay, say okay, okay, okay. Okay, let me put those other entries also out to you. Control C. When you start the production, right, you issue goods. Now this issue goods comes to the preliminary cost element. So it would be what? During the month, debit your RM consumption, raw material consumption account. Credit goes to RM inventory. Credit goes to RM. Okay, we were here so during the month when I am issuing goods. Okay, so when I issue the goods, so let's say issue goods against production order. Okay, what happens is your raw material is debited in primary cost element. Okay, in primary cost element. In primary cost element, this you need to remember, this is the actual cost element which is part of your P&L, and credit your inventory RM, right? You will just inventory raw materials, raw material. So you have issued for against consumption, Q space. So this is tab, back, tab, okay, done. This is when you issue goods against a production order. Let's say I start a production order when I am issuing. Now when the activity is getting confirmed, it happens against the secondary cost element. Okay, I don't want to confuse you here, but still look at it. It is going to consume against secondary cost element. Debit goes to the order. So activity confirmation. Now what is activity confirmation? This particular labor here, which I will circle in yellow now. Let me show you in yellow. So please remember these entries. Okay, very important. Okay. So this particular thing which I am now circling, this 700 here will be issued against the order. But look at the entry that happens. So activity confirmation against, so this will not be issue goods. This will be activity confirmation. Activity confirmation. So this is in fact actuals, because after the production, you know how many hours of labor machine you have consumed, right? So you have here, so what I will do here, so labor activity. Now look at it, what happens here. This is the interesting one. So let's say here labor activity, the debit goes to order. So both of them are in secondary cost element. Now secondary cost element are not part of your P&L. Okay, secondary cost element, the same thing I have to capture here. I capture it here. Okay, so credit goes to cost center. Okay, let me just show you. debit goes, both of them are secondary cost element, but the debit goes to order, that is production order, and credit goes to cost center. Cost center. Okay. Now this particular entry is not existing in your P&L. It is in the secondary cost element. Okay. Remember that particular aspect. But still, now you have arrived at the, what is the value? 760. Right. Now when you receive the goods, it takes place on, let me copy this one. Okay, let me copy this one. Okay. When you receive goods, issue ne receive finished goods, received, okay, finished SFG or finished goods against the production order. So what happens? Your inventory finished goods or SFG will get debited. Okay. Now this is happening to the primary cost element. This is happening against the primary cost element. But what is the value? So inventory, let us say SFG or FG, whatever you are manufacturing. Okay. Inventory, SFG. Okay. And then credit goes to COGM. Credit goes to COGM. But the value here is the preliminary cost estimate. So suppose that our preliminary cost was 1900 or 560. This 560 here is the example. So it takes place for 560. So I'll give the amount also here. So it happens for 560. Alright, this happens for 560. Let me give here green. Okay. So same thing COGM. COGM is also, this is also taking place against the primary cost. Okay. Here again you have to copy. So this happens with 560. But then there is a 200 variance, right? This particular variance here. For the variance, this particular entry gets booked. This particular variance, if you settle the variance during the month, if you settle the variance during the month, you will not have information about the actual cost. You only have information about actual consumption. Then this particular entry production variance, this production variance will come here. So here it will come for 200. Okay. This particular variance here, again one more 200 here, COGM. Now this again is coming to the primary cost element. So I can copy this primary cost element here. So I can copy the primary cost element. So this happens to the primary cost element. So let me just delete it. One more tab, delete it. Okay. This also happens to your primary cost element. Okay. Delete. And here this. So I have to copy the primary cost element. So remember these entries, I will show it to you at the time of production. Okay, it's very important you understand this logic. Okay, so here I have primary cost element. Okay, back. So here 200. Okay, you have 200. So this is 560 here, this is 200 here. Now if you look at it, though it is primary cost element is part of your P&L, but your variance is now sitting in the P&L, but this 200 should go to inventory SFG, right? That happens only in the month end. Only in the month end that particular entry will happen. What will happen in the month end? This 200 as well as another variance is coming here, right? 140. Totally 340 will be transferred to the inventory. So this happens during the month end. So do not get confused with actual costing. Actual costing is covered in the advanced scenario because we have started configuring in August. I can show it to you only in the month of September, but actual costing is part of the expert level program. For now, you have understood the primary cost, right? Preliminary cost estimate. These entries are very important. If you do not understand these things, you can call me or you can write to me. We can fix up a time and I can again demonstrate it to you. Okay. Thank you very much, or you can leave a comment there. I will again explain it to you. So thank you very much. No, sorry, not thank you. Let us go ahead and do this configuration now. Okay, now remove this element. So I'm going to do these configuration steps. I'm going to define a variance key, define default variance key, define target version. Target version is very, very important here. Okay, create allocation structure for settlement. I will say which accounts in the allocation structure. I'll say which of these GL accounts you have to consider, okay, for settlement. Then I will create a settlement profile and assign this allocation structure. Then I will assign that settlement structure to the order type. Okay, then I will define the number ranges. These are the 7 settings which we will do. Let me now go to the SAP. Okay, so again I have to re-enter. Okay, S4 HANA. Okay, now go to the SPRO. I am taking the shortcut key SIMG. If you do not have access to SIMG, you have to go to the SPRO and click on the implementation guide. Go to controlling. You can go to product cost controlling, cost object controlling, cost product cost by order. These are month end activities, right? Variance, settlement, etc. So work in progress, right? Then define result analysis key. So I create the result analysis key. I will show you the T code, additional information, display key, IMG activity. Okay. Now do not get worried if you are not understanding these entries. I will show it to you by creating a production order. You will be able to see all of these entries. Then I will show it to you how it affects your P&L, etc. So no worries. We will do all of these. Okay. So now OKG1 is this the T code which I have mentioned in the PPT. Let me just check OKG1. OKV1 I have mentioned, it is supposed to be OKG1. So let me just change it to OKG1. Okay, sorry, OKG1. Okay, you have OKG1. Let me just increase the font size. Okay, OKG1. So I'll first create, sorry, this is result analysis key. Yeah, this is result analysis. No, I should not go to work in progress. I'm sorry, I have to go to variance calculation. Variance calculation is in fact OKV1. I was correct in the T code. So it is OKV1. So let me increase the font size. It will be easy. Okay, V1 is the correct T code. Click on the variance key. Okay. I can create a new variance key. There are no attributes. See, these are the only two attributes, right? Line items and scrap. Ignore this. Select the K100 or just click on new entries. So in new entries, I will create B100. Okay. And B100. So let me see what I have given the description T100 variance key. So now I'll give B100 variance key. Okay, B100 variance key. If you are creating this variance key to calculate only the scrap, you can tick the scrap. So you can create multiple variance keys, right? So I am not doing that. I'm just creating the variance key for actual production order. So save, back. So your variance key B100 is created here. Now go back. And when I go back, you see here, I have to create what is the next one, what is the next setting it says define default variance key for plants, which means for plant, which variance key should I consider? So this particular setting, OKVW, okay, click here, okay. Now to your plant, you need to assign your variance key. My plants are BB10 and BB20. So you see BB10, what is the variance key I will assign? Whatever I have just now created. I have created B100 and for BB20 also I will assign. That's all. To your plant, you have given a default variance key, but you can change it. Where can you change it? You can change this variance key in production order. You can change this variance key in material master also. So both the places you can do. You can govern this at plant level. You can govern this at a material level also. Then define valuation variant. Define target cost version. Can you see define target cost version? Click on the next one. Define target cost version. Here you have to let me see what I have done previously. So I will take 0 as the version. I will take 0 as the version for total variances and I will copy it. If you want one for target cost version for production variance, planning variance, you can do that. But I am now going to define only for 0. Copy it. Okay. Now my controlling area is B100. So select B100. Right. I will say target version is 0. Target variance cost for total variances. What do you define here? When do you get variances? You get variances when you compare two numbers. One is planned, one is actuals or any other value. So for controlling, we call it control cost. I am saying don't take planned cost, take actual cost. Because when I am producing the goods, I know my actual consumption of my materials. I know the actual consumption of labor activity, all other activities I know actuals. So I am saying for control purpose, this is the control benchmark, right? No, this is the benchmark. Target is the benchmark. For control cost, you take actual cost. For target cost, you take the current standard cost estimate. You take the current standard cost estimate. If you want that cost estimate to be calculated on the fly, right? At the time of executing this variance, you will have to give the costing variant, okay, and the version. I'm not doing that. Rather, I'm saying my target is to achieve my standard cost estimate. My standard cost estimate in the example which I showed you a few minutes back was 560. My target is 560 and my actual cost is my control cost. What I intend to control is actual cost. So variant is 0001. Just say enter and save. That's it. That's it. Say okay. Save. That's all. So now if you see B100, you have assigned this particular total variances. Save, back. Okay. Now there is no other setting for variances. You can check the variance variant for WIP and scrap, which I am not doing. Check variance variant here. Click on execute. So all these variances are considered in variance variant. So save it. We will do in the expert level course all of these variants again, usage variance, etc. We will be doing it. So all these steps you have now done. Now we will do the settings for settlement. We will now do the settings for settlement. If you compute the variance and you want to charge it back to your production variance, how do you go about it? Okay. Okay. So let us now do, once the variance is calculated, it doesn't book any accounting entry. But we wanted it to book an accounting entry, so we'll go to the settlement. So I'll say settlement. Okay. Create settlement profile. Now before creating a settlement profile, I have to do an allocation structure. Say allocation structure. Here I am going to define a new allocation structure called B100 allocation structure. So what I will do, I'll click on new entries. Okay, let me just check which controlling area I am on. Other CO area. Controlling area is B100. In B100, I am going to define B1 as an allocation structure. So here let me copy the description. Okay. So here I will give B100. Okay. And save. Okay. Now allocation structure, you just have given a title here, a key and a description. Now you have to give assignments. Okay. Here I will give 3 different assignments, say new entries. I will say for material consumption materials, and 20 I will give for activity cost, and 30 I will give for overheads. So 3 different assignments I have given. Okay, save. Now to this one I have to give the source, right? I have to give the source. Go to source. Okay, I can give the cost elements. Consumption cost element is 401 star. Okay, my chart of accounts is B100. Let me search. My consumption account is 401 000 100 to 139. So 310 is there. No, 139. So I can give here 401 100 to 401 4 zeros and 139. But instead of giving this, do you remember I have given what you call cost center group? I can give that particular cost center group also here. Okay, but let me give the cost element so that when we come back and searching, then I don't have to go to the cost element group and show it to you. But if you want, you can do that. What is the cost element group? If you recollect, in controlling area B100, I have created something called material consumption. Okay, these are the same accounts which I have given there. Okay, so I will delete this, select delete. Okay, select and delete and save. What has happened now? I have created this cost element group. I have to settle this material cost, right? So that go to the settlement cost element. Here, who is going to receive any variance on account of material consumption variance? Let's say instead of consuming our planned quantity of 3 units, it has consumed 4 units. So there is a difference, right? How do I charge for that? So new entries. So you are saying the settlement category is by GL itself, okay, and then settle it by cost element itself. Whatever the primary cost element you have use it the same account and you settle it. Save. Save. Done. Now my next assignment is activity cost. Select activity cost. Go to source. Source, if you remember, I have created for activity cost. Was it for labor I have done or for entire activity cost? Let me just check whatever is there. There is an activity cost elements. So I'll select here. Okay. Let me just check in KAH3 slash OKAH3. Okay. So activity cost, okay, only labor is there. So let me not take this one. Okay, this is only for labor. Let me create another one, all activity. So that I will create in all activity. So there was some another cost center where I have created this. Let me just check. Material activity, material plus activity splitting structure elements, not here. So I'll have to create all activity, a group called all activity. Go to KAH1 slash and KAH1. Okay, B100 activity, cost element group. Cost element group, I am going to say it is okay. The this one I will create it as all activity. So B100 all activity. Okay, enter. B100 all activity. This okay. Cost element is 941, 6 zeros and 1. 941, 6 zeros and 6. Say enter. So why did, oh, it's not 941, my bad, my bad. Can I delete it from here? So I have to go back and remove this. 943. So let me again go to KAH1. I did not save it, KAH1. So again create it. So let me bring the description. B100 all activities. Okay. Cost element is 943. Instead of 941, I will have to say here 943. Okay. So 943. So again here 943,006. 943,006. All the cost elements has come here. Any variance on account of any activity, it will settle. Okay. Very important to know that. So that this I have created B100 all activity. Now I have to go to the other screen. Here B100 all activity I will give. So I have created another group ALL-ACT. Enter. Okay. Save. Go to settlement cost element. Settle by GL account. Okay. Settle. Now GL account. Where is a GL account? Here. GL account. Select by cost element. By cost element you do the settlement. Save. Now go to assignments again. Select overheads. I have not created any settlement for overhead. What I will have to do now? I'll go back and create a group, or else I will directly assign this. Okay. I know the accounts. So it is 941,001 to 941,009 I will give. Though I have only 3 overhead accounts, I will give it as 941,009 in case in future if it is required, it will give that. So I have created an allocation structure. This also I will say, no. This is the same controlling area, new entries. Select by GL account, you have to settle this. Okay, by cost element, say save. Okay, back. So allocation structure is now done. Allocation structure is now done. This allocation structure, we will assign it to a settlement profile. Okay. So now you see there is settlement profile OK07. Go here. Okay. So select OK07, new entries. Okay. I'll create a settlement profile, or I can copy it also. Let me see new entries. What else is there? So all these things are there where I'll have to go individually and do it. So let me just copy one of the previous one. It is easier to copy rather than redoing everything. So let's say T100 I am copying. I am copying it. So I'll call it B100 settlement profile. B100 settlement profile. So B100 settlement profile. It has to be settled in full. Down payments to be settled. The allocation structure what you just now created. Let's assign here B1. So allocation structure, this is the allocation structure, click enter. So again go back to B100. See B100 allocation structure. So indicate as 100% you validate settlement, equivalence, say amount settlement, right? You have document type in which this GL account has to get posted. Maximum number of distribution rules 3, residence time 12 months, just select it as it is. What can be the receiver? This settlement can, I am going to settle it against order. So order I am selecting as optional. I am saying don't settle it against material, optional. But I am saying profit segment do not settle this particular allocation structure. So I said do not settle profit against profit segment. Okay. So these are the settings. Remember, save. So now you have created a set allocation structure and you have assigned it to the settlement. Now that it is assigned to the settlement profile, right? What else you can do? Okay, what else you need to do? So let me go back to the PPT. What you have to do is you have to go to the order profile, and in the order profile you have to maintain this settlement profile. Where do I go for that? I'll have to go to the production. So I'll collapse this for now. So go to production. In production you go to shop floor control. In shop floor control go to master data, go to order, go to the order types. Okay, go to order types. You have defined a new order type called B100. Now you see the settlement profile, it is taking some other settlement profile, and this settlement profile may not even have the allocation structure which you have created. So what you need to do? B100. Okay, save. Save. Okay, done. Save. Go back. Okay, I have assigned the settlement profile to my order type. Now go back, save. So when the settlement profile settlement gets carried out, you need to now have document number for settlement document. So that's the only setting you do. Go back to your production order, product cost by order. So in settlement, do you see maintain number ranges for settlement document? Click on execute, intervals. Okay, there is already an interval 0, 1. Okay, let me go back here. Okay, let me see intervals. Let me see, click change. So now here, do you see any B100 is there here? B100. Assign it to one of those document ranges. So variance settlement document number ranges 0, 1 is there. If you want, you create a number range, and to that number range you can assign this. So I have just created this and assigned it here. So if you now scroll, your B100 is assigned to that particular number range. So B100 will be assigned to the number range 0, 1. See, to the 0, 1 you have assigned B100. That's all. Whatever number range is defined in the 0, 1, it will inherit it. And it will be inherited by all these legal entities also. So if you want exclusively for your particular company code, you can do that as well. Controlling area you can do that. So I have done only till here. That's it. So with this, all the settings are over. Let us take a quick look at the PowerPoint and check whether we have completed everything. So a quick recap, we understood what is variance and settlement. So I have shown you an example here. I showed you what are the entries that gets posted at the time of production. I have not shown you the entries that gets booked during the month end, because that will be part of the actual costing. At this point of time, it will cause confusion to you. Okay. Then simultaneous costing. Now after this orange vertical line here, I have not shown the actual cost here. That will be part of the actual costing. But actual cost, when will you get to know? Only during the month end. Apart from that, we did all these settings. So you are now good to do production, right? You are good to execute variance. You are also good to do settlement also. Okay. Now this is done SAP product costing, and there are two levels, foundational and expert. So both foundational and expert I am doing that on the Udemy. You may please watch. Both of these two are two different offerings from us. So enjoy, happy practicing. Please practice. Okay. Thank you very much.